You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Thursday, October 25th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It is the top 5 things to know in the market on Thursday. First thing to know is, if you didn't know already, Dow futures jumped 200 points as Wall Street was set to rebound. As stock index futures pointed to a higher open, indicating that Wall Street was set to rebound after the previous day's tumble wiped out the Dow's gains for the year and pushed the Nasdaq into correction territory. Second thing to know today is Amazon and Alphabet highlight the busiest day of earnings season. Investors will be inundated with corporate earnings as 66 members of the S&P 500 and 2 Dow components are scheduled to report results in what will be the busiest day of the third quarter earnings season. Twitter, Grubhub, Shopify, Altria, General Electric, Raytheon, Celgene, American Airlines, and Southwest Airlines were all due ahead of the opening bell. And most of the focus will fall on Amazon and Google parent Alphabet, which both report today after the bell. The third thing to know today is Tesla shines in pre-market trade. Tesla reported a net profit, positive cash flow, and wider than expected margins for the latest quarter, delivering on Chief Executive Elon Musk's promise to turn the electric car maker profitable as higher production volumes of its new Model 3 begin to pay off. Tesla reiterated late Wednesday that it expected to repeat its net profit in the current quarter, helping drive the company's shares up around 10% in pre-market trading. The fourth thing to know today is durable goods data, and Fed speakers are on tap. Investors will get a key piece of economic data when the Commerce Department releases the September report on durable goods orders. That was this morning at 8:30 a.m. Eastern. Analysts expected total durable goods orders, which include transportation items, to fall 1.3% from the prior month. At the same time, the goods trade balance for September arrives, with economists predicting a slight narrowing of the deficit. Also out this morning were weekly jobless claim figures, preliminary numbers for September wholesale inventories, as well as the latest data on pending home sales and the Kansas City Fed's Manufacturing Activity Index. On the central bank front, a pair of speeches are scheduled to take place. And the fifth thing to know today is European Central Bank policy meeting is taking place. The European Central Bank is all but certain to keep interest rates at their current record low levels when it announces its policy decision at 7:45 a.m. Eastern Time. The announcement will be followed by President Mario Draghi's news conference at 8:30 a.m. Eastern Time. Investors will be looking for any new guidance acknowledging the recent slowdown in growth, as well as the political standoff between Brussels and Rome over Italy's spending budget. The ECB has previously pledged to end its bond buying program by year-end, while keeping interest rates at current levels well into 2019. Our second story today is from CNBC.com. Cryptocurrencies stay mostly steady despite global stock market sell-off. Cryptocurrencies held up by and large on Thursday despite a rout in global stock markets. In the afternoon of Asia hours, Bitcoin had fallen by 0.23% to around $6,484, while XRP saw losses of 2.09% and Ethereum shed 1.38%, according to data from CoinMarketCap.com. It's not unusual to see Bitcoin lead other digital tokens lower. The steady performance among cryptocurrencies contrasted sharply with the last time there was a major market sell-off. On October 11th, Bitcoin fell more than 4%, while XRP and Ethereum plunged more than 11% during Asia trading hours alone, according to data from CoinMarketCap. Back then, over the course of 3 days, cryptocurrencies as an asset class saw $18 billion of their value wiped out as global markets tumbled. Our third story today is from Yahoo Finance. SEC won't release speed bump study it promised 2 years ago. The Securities and Exchange Commission won't release a study on the impact of brief delays in stock trading on market quality and pricing that investors have been expecting for 2 years. The SEC committed in June 2016 to complete the study when it reinterpreted one of its rules to allow so-called speed bumps that briefly pause trades before relaying them to exchanges for execution. The move allowed IEX Group to become the first exchange to offer a trading venue that slows the speed of trading. IEX argued that the 350 microsecond delay helps prevent rapid-fire traders from racing ahead of typical investors and unfairly profiting off their speed advantage. That claim was disputed by high-tech trading firms that warned the speed bump could increase trading costs for investors. In late June, shortly after the 2-year window expired for the SEC to complete the study, the Wall Street Journal filed a public records request to obtain a copy. The agency responded on October 16th with a heavily redacted 18-page document, a report on the effect of IEX's intentional access delay on market quality, including price discovery. A spokesman for the SEC declined to share any of the study's findings and said the agency has no immediate plans to release it to the public because it deems that report internal. Our fourth story today comes by way of Investing.com. CME Group earnings beat and revenue misses in Q3. CME Group reported third quarter earnings that beat analysts' expectations on Thursday and revenue that fell short of forecasts. The firm reported earnings per share of $1.45 on revenue of $904 million. And our final story today is from CNBC.com. U.S. trade deficit in goods widens for fourth straight month and hits $76 billion. The U.S. trade deficit in goods widened for a fourth straight month in September, bringing it to $76 billion, according to data released by the Census Bureau. The data showed exports grew 18% from August to September, from $138.4 billion to $140.95 billion. Imports, meanwhile, expanded by 1.5% to $217 billion from $213.9 billion on a month-over-month basis. Wholesale inventories, meanwhile, grew by 0.3% to $644.1 billion in September from $642 billion in August. The overall deficit's growth comes as the U.S. and China engage in a trade war. Both countries have slapped tariffs of billions of dollars worth on each other's goods this year. The Trump administration is using tariffs to try and narrow its deficit between imports and exports. This has kept global investors on edge as they fear tighter trade conditions will slow down the economy. And that, ladies and gentlemen, is News You Can Use for today, October 25th, 2018. Your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.